Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. Today, my guest is Wayne Kaufman, Chief Market Analyst at Rockwell Securities. Wayne, welcome back to the program.
Hi, Mike. Great to be back.
Thank you. I know you're very much into the technical aspect of the market, and I'm interested now, particularly since, we see sort of this, on the one hand, the fundamentals don't look that great. We're seeing second quarter GDP now being revised lower to under 1%. Still have problems in Europe. We have a slowdown in China, yet the equity market is still very strong, moving up, gradually. I think a lot of people are sort of confused by this. Can you shed any light, at least from a technical standpoint?
Well, I'm a little bit confused by it also.
There you go.
As a technician, my job is to analyze the supply and demand aspect of the market and to help our investors position accordingly. Based on the technicals, as you said, the market's very strong. Market breadth has been phenomenal. People are worried about an important market top. It's just not in the cards. These are not the kind of breadth numbers and market action that we see at tops. It's just not like that.
So normally, if we were at risk of seeing a top, you're saying you'd see some deterioration. Certain sectors of the market would start to
That's exactly right. What happens is, as companies announce bad news, investors flee those companies. So one by one, the stocks start to fall off. And then the faster money positions into the ones that are still working, and what happens is you see a narrowing of the market, and this is what we saw in 2007, and that is typical. In 2007, we had the top in September, and in the months before that, in August, for example, the percentage of stocks over their own 200-day moving average was only in the 40% range, in the 40s, and it peaked at the day of the peak in 2007 at 53%. Compare that to today, where for months we've had the percentage over 200 in the 80% range. Even in June with the dip, it never got below the 70s, and this is just not what you see. This type of broad market action is not what you see at tops.
Have there been times, in history where you got a top when it looked like you weren't supposed to get one based on that sort of analysis?
There have been about 3 times where, using only the advanced decline line, where the advanced decline line did peak at about the same time the market did peak, but 3 times in history you see that's a really rare occurrence. And I'm not 100% sure what the other factors looked like at that same time.
I want to take a look at 2 commodity sectors, if you will. One is gold, and how that looks from a technical perspective, and the other is oil, which seems to be breaking out right now. First, let's talk about gold. We've seen a pullback, I think, to a degree that surprised many people. I mean, we had that spike down below 1,200, a little bit of a bounce back now. How do you view that?
Gold's in a bear market. Okay, by the classic definition, 20% or so. Gold is in a bear market. It's below every conceivable moving average. It broke so many support levels, and we are having what a technician would call a counter-trend bounce, or maybe even a rally.
How high do you think that can go?
This morning, before I left the office, I saw it was just starting, GLD or gold, I forget which I looked at, was just starting to get above its 20-day moving average, and so were the gold mining indexes, the GDX, for example. There's still some very, very strong resistance right up above it. Now, I became short-term bullish on gold just this past weekend. This is what I told our brokers. The simplest reason, sentiment
got very negative, right?
It's the most negative it's been probably in decades, certainly in years, and it's the type of negative sentiment that we do see at bottoms for gold. So now, whether or not this will just be a counter-trend rally. We should know this over the next couple of weeks because it's getting up towards those important areas.
Okay, so you said it was a counter-trend rally, but you clarified and said we're not sure it could be a reversal, but right now you'd kind of put the odds that it's a counter-trend rally, and at some point later on, that bear market, which you mentioned, is going to resume.
That's exactly right. If we can break through the resistance that's just overhead, then it'll look more like an important long-term bottom is in. But until then, the burden of proof would be on gold bulls, not on the gold bears.
Now, the other commodity I want to talk about is oil, and we've seen a rally in oil, and it's important also from an economic standpoint because, these are the kinds of things that can hit the economy. You start to sap away the consumer's disposable income in the form of higher gasoline prices, higher fuel prices. That can have an impact. So what are we looking at here?
I identified oil as one of my concerns a month or so ago. Oil has been in this very tight, narrow range, what I've called an eerily narrow range for the past year or so. And now it's starting to move to the upside. And this is very interesting. People, well, maybe it's Egypt or this or that. I try not to figure out the reasons sometimes. I just have to see the chart. But this morning, oil was challenging the highs from February of 2012 at about $110 a barrel. And should we break through there, it was oil that had a big part in the peak back in 2007. If you recall, oil was getting up 150 or so. People were calling for 200, crazy projections. But I am concerned about oil. It is one of the concerns that does create what I think is a lack of visibility for financial markets as we head into the second half of the year.
Yeah.
I'm definitely concerned about oil.
Definitely have to keep an eye on that. I want to talk a little bit about the Fed and the expectation of taper. We saw a little example of that, at least the psychological effect on the market back in May or June when it was first put out there by Bernanke that maybe they'll start to taper later in the year. How do you think the markets ultimately would react, over a little bit of a longer term than a couple of weeks? But how do you think they will take an actual taper announcement where it goes into effect? Is this one of these things where, buy the rumors, sell the news sort of thing? I mean, you get your negative reaction on the fact that we're going to have taper, but then everything starts to resume back in the same direction?
The taper is, to me, the number one issue in the market today, unless oil goes to 130 or something like that. The taper is the number.
In what sense? In the sense that it's psychologically affecting it, or if it happens, it's going to shift everything? Well, or both?
Either or, okay, definitely. Anybody who watches the market closely, as we do, has seen that for the last few weeks, the number one factor has been the 10-year bond yield. When he speaks and it shoots up, stocks have a big problem. When the bond yield comes down, stocks settle down. So in the overall valuation of the market, when you're looking at bond yields versus equity yields, those are essentially your two factors. Well, right now we're doing well because earnings season is doing decently. Okay, it's not great, but it's decent.
Which is also interesting, right? The way corporates have been able to maintain their earnings.
But here's the thing that concerns me, and I've said this for a couple of months. Once this earnings season catalyst is out of the way, and that half of the equation between bond yields and equity yields, that half is done, then you're strictly going to be back to the market watching that bond yield again, and that is what creates the volatility in the market. And he just got done saying that there's no preset timetable,
right?
And that inflation is still below target, and he's concerned about jobs. and that.
But that was kind of a flip-flop from the original.
He
and
walked it back.
Yeah, because the
100%.
markets react, and then they're like, whoa, wait a minute.
That's right. That's right. It's comical almost.
All right, so just to sum it up now, your views, like for the next, for the second half of the year, steady as she goes, caution, I think, would be the...
My views overall are I am a long-term bull on the market until other factors kick in. I am concerned about some softness here in August and September, but unless the price of oil really gives the market a wallop, then I think that people should be looking to buy stocks in any August and September weakness, and then we do continue going higher. Not as fast as we did this first half of the year, but I think we have a decent fourth quarter.
And watch those gold prices, right?
Yes.
All right. Wayne Kaufman, thank you very much. Always a pleasure.
You're very welcome.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.